Hey everyone, Couch Investor back to another video for today. So, Chinese company Pinduoduo just reported earnings, major competitor to JD, to Alibaba. Pinduoduo, if you don't know, it's also that company, it's PDD Holdings, hold Pinduoduo and Temu. Temu is, let's say, another version of Wish, for example, maybe a tiny bit better, major competitor to Shein as well. By the way, Shein or Shein, whatever you want to call it, is going to go public in the United States. So, according to Wall Street Journal, Chinese fast fashion retailer Shein makes confidential filing for US IPO, and I believe valuation is close, it's between 60 to 90 billion dollars or so. Remains to be seen what the real valuation will be after it goes public. Remember, Wish also went public, was valued at around a couple of billions, and now it's worth $100 million or something like that. So yeah, be aware with those types of IPOs. Now, a bit more information with regards to Temu, with regards to Pinduoduo. So apparently here in June, this was a report from Bloomberg. A once obscure Chinese startup overtakes Shein in the United States. Spending on Temu, an e-commerce marketplace backed by China heavyweight PDD Holdings, was 20% higher than more established fast fashion retailer Shein in the United States in May. I'd also like to add numbers from Q1 2023. I didn't find the updated one just yet. So monthly active users of mobile shopping app Pinduoduo in China from the first quarter of 2021 to the first quarter of 2023. We can see that this number sat at 623 million, quite a nice increase since 2021. So this is definitely a player you should keep an eye on, especially if you are invested in Chinese companies, especially if you are invested in those Asian companies that are in the e-commerce sector. Now, before we continue, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. If you want to support me even further, do check out the link down in the description and the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, quick comparison here between Pinduoduo and Alibaba. As you can see, before the market opens, the stock is up 15.24%. Currently has a market cap of just under $160 billion. Year to date, stock is up 44%. So quite an outperformance if you look at other Chinese players. Now, if you look at the difference between both of the companies here, orange is Alibaba, blue is Pinduoduo, it's pretty clear, right? Alibaba still the bigger company generating more and more revenue, but the growth rates are very, very different. Pinduoduo has been growing much faster than Alibaba. Same with free cash flow. Of course, free cash flow, Alibaba much more than Pinduoduo, but free cash flow, the growth there for Pinduoduo has been more aggressive than Alibaba. As for return on equity, Pinduoduo sits at 34.9%, Alibaba at 11.32%, but has been increasing in the last couple of quarters. With regards to gross profit margin, Pinduoduo 72%, Alibaba sits at 37.7%, but as we've seen in the past quarters, it is improving a bit. And as you can see here, Pinduoduo is now decreasing each and every quarter. And for those that needed that small reminder, this was basically Alibaba's latest quarter. Total segment revenue increased 9%, with the biggest increases coming from Alibaba International Digital Commerce Group, local services, and the China Logistics Network. As for income from operations, that has increased 34% year over year. Adjusted EBITDA was up 18% year over year, and non-GAAP diluted earnings per ADS increased 21%. And of course, free cash flow has been in the billions of dollars. Now, comparing that to what we have here from Pinduoduo, where revenue increased 94% year over year to $9.43 billion. Operating profit increased 60% year over year. Net income attributable to ordinary shareholders increased 47% year over year. I'm going to read a couple of comments here from management. So we are dedicated to generating value through innovations, which form the foundation of our high quality development. We continued to invest decisively in areas such as agri-tech, supply chain technology, and core R&D capabilities. Through these efforts, we aim to create our unique value. Last month, we celebrated our 8th anniversary. We sincerely thank all stakeholders for the support we received. Throughout the past third quarter, consumption vitality kept improving. We continue to provide consumers with more savings and better service through increased investment. And last thing here, Under our high quality development strategy, we increased our investment in technology and further deepened our mind share in the third quarter. Our financial performance reflects the early results we have achieved. Going forward, we will continue to invest decisively to support our high quality development. Now, all that is great, right? The huge increases here year over year for operating profit and revenue. That does come at a price. What is the price? Well, total cost of revenue has increased 262% year over year. The increase mainly came from increased fulfillment fees, payment processing fees, maintenance costs, and call center expenses. Total operating expenses also increased 44%. Now going back to the revenue for a second here, so it increased 94% year over year. You can split it into two parts. One is the revenues from online marketing services and others that increased 39% year over year. And then the other one is from transaction service that increased 315% year over year. So as you can see, they're growing extremely fast because they're still investing a lot in their business, right? We've seen total expenses is increasing quite a lot. Total cost of revenue is increasing a lot as well. But currently it is working because, well, they've got that momentum with them. That's why we're seeing Alibaba a bit more stable right now, whereas Pinduoduo has been investing a lot and growing much, much faster. One of the main reasons is obviously the rise of Temu, which I managed to find more information right here. So the shares are up around 15-16% or so after the Chinese e-commerce firms reported earnings and revenue well above estimates. Fees that the budget shopping site charge for transaction fees and items that includes its overseas venture Temu saw a 315% year-over-year increase and almost double that of the average analyst estimate in 3Q, a sign of rapid expansion abroad. Couple of comments here from the analysts. One at Citi, a 25% beat on total revenue and a 30% beat on non-GAAP net profit will likely blow away the most bullish whisper numbers by investors. Same analyst believes that the company should start to provide a more detailed operational review on Temu, given the revenues generated from the division. As for vital knowledge, bullish investors may argue that the Temu unit continues to take the world by storm, powering massive top-line growth far exceeding peers like Alibaba and JD.com. Bearish investors may argue that the top-line growth is coming at a cost, with gross margin falling to 61%, more than 300 basis points below street estimates. And I 100% agree with the point the Citi analyst made there. If Temu, well, we know that Temu is growing extremely fast, then it's time that management starts giving us precise numbers in that report. Of course, some might say this is a Chinese company. The fact that they're not giving us that information is probably because they're hiding some things. Okay, maybe, but remember, lots of other companies are also removing things, slides, graphs from their earnings report constantly. So it's not just a Chinese thing. But yes, if Temu is one of the main reasons why this company is growing so fast, then we should have those numbers in that report. Let's see what happens in the coming quarters. But for now, this is the graph. I mean, the last time I covered this company, we were at around $70 or so. That was the Q1 numbers. Since then, right now, with pre-market action, the stock basically doubled from there. So we're probably going to be overbought. But I mean, at the pace that this company is growing and probably taking a lot of market share from their competitors, it's probably granted, but hey, as always, if you have a position in Pinduoduo, if you have a position in a company that is overbought, maybe wait until the market is digesting those numbers. Usually a red day or two will follow, and then maybe it's a bit of a better time to add. Or maybe if you want, take profit, that's also fine. I mean, we are going to be well above the 20-day, 50, and the 200-day moving average. Currently, the 200-day moving average sits at around $90. Then you have the 50 at $104 and the 20 at $112 or so. So yeah, do with that what you want. Overall, again, very, very impressive numbers from Pinduoduo, especially after we've seen the other competitors, the other players in China and in Southeast Asia as well. If you hold these types of company, do share your thoughts down in the comments below. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one.